Hello guys and welcome to today's video. In today's video we are going to learn about stocks, stock markets and how this entire thing began. So without any further ado, let's get started. So what is a stock? A stock or a share is a financial instrument which represents ownership in a company. By owning a stock or a share, you own a part of the company. Pretty cool, right? The higher the number of shares that you have, the higher your stake in the company. What is a stock exchange? A stock exchange is a place where investors can buy and sell in stocks of publicly traded companies. Now you might ask, Shomik, what is a publicly traded company? A publicly traded company is one in which the shareholders have a claim over a part of the company's assets and profits. Okay, enough with the definitions. Now let us understand how this entire thing began, how stock markets came into being. So the journey dates back to the early 1400s. Venice and Belgium, they were the center of international trade. So it occurred to a few merchants that they can buy goods at a lower price at the moment, and when the supply decreases later down the line, the demand will increase and they can sell the same goods at a higher price. This is how the concept of buy low and sell high came into place. So who invented the stock market and how did it came into existence? The first modern day stock market came into being in Amsterdam. The Dutch East India Company was the first publicly traded company. The East India Company wanted to raise capital in order to increase the amount of trade they could do. So they wanted to invest in their fleet and in the manpower. And in order to do that, they needed capital. To raise the capital, they decided to go public. So they decided to sell shares of the company, and in return, they would pay dividends out of their profits to the investors. This is how the first publicly traded company came into picture. At this point, other countries began doing something similar. Many companies were starting up and investors started putting their money into each of these companies without knowing what is the underlying fundamental of the company, quite like people are doing today. Most of the investors in this excitement started pouring in all of their money into companies they have never heard of. Few years down the line, this resulted in a financial instability, and the investors became fearful and they started selling all of their shares, and there were no buyers. As a result, the market crashed. In 1817, a few group of merchants came together and they made the Buttonwood Tree Agreement, which we now know as the New York Stock Exchange. They decided to meet daily and they started buying and selling stocks and bonds. Now let us talk about how it started in India. In India, the security trading goes back to the 18th century when the East India Company began trading in loan securities. By the 1830s, corporate shares were traded. Now these shares were of banks and cotton mills. A simple and informal beginning took place when in 1850, 22 stockbrokers started trading opposite to the town hall of Bombay. This place still exists and it is known as the Horniman Circle. Their venue kept on shifting from one place to the other, and finally they settled in 1874 at a place what is now known as the Dalal Street. They soon registered themselves and set up the BSE, Bombay Stock Exchange, in the year 1875. Soon enough, many other stock exchanges popped up, and they were the likes of Ahmedabad Stock Exchange in 1894, Calcutta Stock Exchange in 1908, and Madras Stock Exchange in 1920, and so on. BSE is the oldest stock exchange in India as well as in Asia. In BSE, there was very low transparency, undependable clearing and settlement systems. This led to the need of the hour of a regulatory body to be put in place. Thus, in 1988, a statutory body was put in place, which we now know as SEBI, or Securities and Exchanges Board of India. After the 1992 Harshad Mehta scam came into picture, there was a need of a stock exchange large enough to compete with BSE and bring transparency into the stock market. This gave birth to NSE, National Stock Exchange. This was incorporated in 1992 and was a recognized stock exchange in 1993. NSE was also the first stock exchange to trade electronically. BSE wanted to compete, so it bought in the Bolt system in 1995, which is the electronic trading system of BSE. Few years down the line, BSE launched its sensitivity index, which is now known as SENSEX. Currently, we have a total of 23 stock exchanges, out of which there are only 7 recognized stock exchanges apart from BSE and NSE. That is pretty much the entire history of the stock markets in a short video. If you liked this video, please don't forget to give it a thumbs up, and I'll see you next time.